Charlotte was one of the nation's biggest surprises in 2011, elbowing Raleigh out of the way to reclaim its status as the Southeast's hottest apartment market and ending the year in the nation's top 10 for apartment revenue growth. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Charlotte update. Back in 2009, Charlotte was being lumped in with Atlanta as a southern market on the decline. New supply levels were very high at the wrong time, just as job losses were very deep. And so it looked like this could be a metro that would take quite a while to recover. But that just didn't happen. Take a look at this chart showing occupancy rates. Over the past 2 years, occupancy is up 5 points in Charlotte's apartment market. Among large metros nationally, only Austin at 5.3 points has done better. And now overall occupancy in Charlotte is at 93.8%. Still a little soft compared to what we saw prior to the downturn, but an impressive rebound nonetheless. And let's shift gears to pricing. Here's a look at annual same-store rent change by quarter. In Q4 2011, rents climbed 0.8%, and that brought year-over-year change to 5.8%. That is Charlotte's largest increase since 1998. And it's the second biggest hike among southern markets in 2011, again behind only Austin at 7.2% and ahead of Greenville, Dallas, Oklahoma City, and Washington, D.C. And by comparison, in Raleigh-Durham, rents are up 3.7% annually. And that helped Charlotte place 6th nationally for total revenue growth at 7.9%. And that also has brought average monthly rental rates on a same-store basis in Charlotte back to where they were prior to the recession, again, far faster than we expected. So how did this happen? Well, looking back, it shouldn't be too surprising, and we'll see that by looking at a chart here showing annual demand and annual supply. And what you see is that despite the job losses, Charlotte never had much of a problem stirring up demand for apartments. At worst, on an annual basis, Charlotte was showing net annual demand at a negative 1,300 units back in Q3 2009. And at that point, new supply levels were soaring upward far later in the cycle than in any other non-Texas market, peaking at nearly 6,000 units annually in Q2 2010. And what ended up happening is that demand came surging back much faster than expected. Beginning in Q2 2010, demand actually topped new supply even as those supply levels were peaking. And now demand has topped supply on an annual basis in each of the past 7 quarters. So all of those new units leased up far faster than expected, and in fact, vacancies remain more of a problem in the bottom end of the market in older, more affordable apartments, and that is because that job losses during the downturn are actually much more problematic in working class segments like construction and manufacturing, and those are also the industries that have been slowest to recover, so that's kept occupancy rates lower in those bottom tier apartments. And let's look at one submarket highlight to wrap things up for you, and it's one that really captures the overall story for Charlotte. Uptown South End, major area for apartment construction the past few years. The apartment base has ballooned nearly 60% over the past 4 years. That led occupancy rates to plunge to below 80% at one point due to all the units in lease up, but it's skyrocketed back up. Occupancy is now at 96.8%, and year-over-year rent growth measured 9.9% in 2011. And as the economy continues to recover and new supply levels in Charlotte have really fallen off, Charlotte's apartment market should continue to do well in 2012. We're expecting Charlotte to again rank in the nation's top 10 for revenue growth in 2012. And that wraps us up for Charlotte. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.